Welcome back to Investing Talk Podcast, where we cut through the noise, take your complex sources, and distill them into actionable insights, helping you get informed fast. Today, we're tackling a question that's definitely top of mind for many in the volatile world of biotechnology. We're zeroing in on Iovance Biotherapeutics. Is now a good time to consider buying this stock? Maybe for a quick trade or perhaps for a longer-term investment? What are we thinking?
We've got a pretty comprehensive analysis in front of us here. We're looking at everything from Iovance's, fundamental health to market sentiment and, of course, the really high-stakes reality of clinical trials. It's a truly fascinating look, I think, at a segment of the market known for both high risk and, potentially incredibly high reward.
Absolutely. And hey, before we really jump in, if you find value in these discussions, please do consider subscribing, maybe liking, and commenting on this analysis. It genuinely helps us reach more curious minds like yours. And also, if you'd like us to look into a specific company for you, just leave a comment below. Oh, and you can always consider buying us a coffee if you appreciate what we do.
Okay, right. Let's unpack this then. We're focusing on Iovance Biotherapeutics. They're a clinical stage biotechnology company. And what's immediately fascinating here is that their financial health, at this stage of development anyway, looks fundamentally different from, say, a mature revenue-generating company.
Right. So maybe just to set the stage for anyone who's not familiar, what exactly is Iovance Biotherapeutics known for? What's their main thing?
Well, they're primarily focused on developing innovative immunotherapies for cancer treatment. Specifically, they're pioneering something called tumor-infiltrating lymphocytes, or TIL therapy. It's a highly personalized approach, and it's seen as a very promising area within immuno-oncology. The goal is harnessing the body's own immune system to fight cancer. Pretty cutting-edge stuff.
Okay, promising is the key word, I guess. Because for an early-stage company like Iovance, many listeners might expect to see profits or positive cash flow, but here the focus is squarely on R&D. What does that actually mean for their financial picture? It's really about burning cash to fuel future growth, not accumulating it yet, right?
That's exactly it. As a clinical stage biotech firm, you typically see little to no profit, sometimes no revenue even. They're investing heavily in R&D to try and bring these innovative therapies to market. Our source material notes limited public evidence of positive cash flow or profits yet, and yeah, they are very much in pre-revenue stages. So you'd expect high cash burn rates and low or even negative free cash flow. This is completely normal, really, for companies at this development stage. They pour resources into their pipeline hoping for that future breakthrough.
Got it. So given that they're still in this heavy R&D phase, this really intensive period, what's their competitive edge? I mean, it sounds like a promising field, but it must be fiercely crowded, too.
It is. Their edge, truly, is their innovative approach with TIL therapy. It's a personalized method that's showing incredible promise for certain difficult-to-treat cancers. It's a novel mechanism of action. But like you said, this isn't a lonely road. They face fierce competition from other cutting-edge biotech firms, all vying for that next breakthrough. And the biggest hurdle, maybe the elephant in the room, is just the inherent, almost nail-biting uncertainty of regulatory approval success. That's the big question mark.
Yeah, that makes sense. And it brings us directly to valuation. Usually we'd start by looking at things like price-to-earnings ratios, PE ratios, but for a company like Iovance, that's just not going to paint the full picture, is it? How do we even begin to value a company at this stage? It feels different.
You're absolutely right. It won't work. They often have negative earnings, so a meaningful PE ratio doesn't even exist. It's mathematically impossible or just not useful. Other ratios, like price to sales, price to book, they tend to be really elevated, and that's because investors aren't buying current profits. They're speculating almost entirely on future success, future breakthroughs. So yeah, traditional valuation metrics are simply not fully applicable here. What this really means for you, the listener, as an investor, is you're betting on future scientific breakthroughs. That shifts the entire investment calculus, from what is it earning now to what could it potentially cure tomorrow. It's a different mindset.
Okay, this is where it gets incredibly intriguing then. The analyst price targets. Our source highlights some truly, eye-popping numbers. What are we looking at here?
Indeed. Yeah, the analyst consensus shows some strong upside potential. The average price target seems to be around $12.22 to $15.34. Now, from current prices, which are near $3.10, that represents a potential jump of maybe 290% to 400%. That's significant, and some forecasts are even more bullish than that. We're seeing numbers reaching $30, $40 in 2025, which, I mean, that could mean returns somewhere near plus 900%.
Wow, okay, 900% potential return. That's definitely the kind of number that gets an investor's pulse racing. But of course, that's a massive range, isn't it, from $12 to potentially $40? What accounts for such discrepancies in these analyst predictions?
Yeah, it's a huge range. And I think this massive range isn't just analysts having slightly different opinions. It's really a stark reminder of the inherent, almost unquantifiable uncertainty in biotech. It's likely due to different models, different forecast horizons, maybe different assumptions about trial success. Given that high uncertainty in forecasting biotech pipeline success, explicit discounted cash flow models, the ones that rely on predictable future earnings, they're rarely found for companies like Iovance. It's just too speculative. You're effectively investing in, while maybe a scientific lottery is too strong, but something with that level of uncertainty, albeit one with incredible potential payouts if a therapy works and gets approved.
Okay, that's a good perspective.
Yeah.
So let's shift gears a bit to the technical picture. What are the charts telling us about Iovance's recent price action? Is there anything noteworthy from maybe a trading perspective?
Well, the recent price action definitely indicates a highly volatile stock, which, as we've said, isn't surprising for this sector at all. But there are some signs, technically speaking, of a potential breakout pattern forming in its price charts. That suggests there could be potential for upward movement, technically.
Interesting. And what about key levels? Support and resistance. What should someone watching the chart be looking out for?
Okay, so support looks to be currently near the $3 mark. Resistance seems closer to $6. And that $6 level is notably around the 200-day simple moving average. That's often a key level that many traders watch. It can act as a pretty significant psychological and technical barrier. But there's potential to push higher, especially if those biotech catalysts we need to talk about actually succeed.
Right, the catalysts. Before we get there, are the technical indicators signaling a strong direction right now? Things like RSI or MACD.
The relative strength index, the RSI, it's hovering around 50. That generally suggests neutral momentum. So not really overbought, not really oversold right now. However, the MACD, the moving average convergence divergence, which tracks momentum along with the standard moving averages, they do hint at some bullish tendencies. But, and this is crucial to remember, strong volatility remains. Our source notes volatility at approximately 26%, which again is absolutely typical for clinical stage biotech stocks. High volatility is part of the package here.
Okay, so beyond the raw numbers, the charts, what's the general sentiment, the feeling swirling around Iovance? How are analysts collectively rating it? Are they positive, negative?
Generally, analysts rate Iovance as a buy. Our source found that 16 analysts suggest mostly buy or strong buy recommendations. And importantly, there were no sell or strong sell recommendations found in the source material. So that indicates a largely positive professional outlook, at least from the analysts covering it.
Okay. And what about broader market sentiment? Is the investing community feeling generally optimistic or maybe cautious about this type of stock right now?
It's a bit mixed, actually. There's some definite short-term bearish sentiment in the wider market, reflected by things like the fear and greed index being in fear territory. However, the overall medium to long-term sentiment specifically for Iovance seems quite bullish, especially when you factor in those, pretty ambitious price targets we just discussed. So it's kind of a dichotomy, maybe short-term market jitters versus longer-term optimism for this particular company's story.
Interesting dynamic. Any insights from the source about insider activity, like executives buying or selling shares, or even just general social media buzz around the company is being talked about?
Our source didn't provide specific insider buying or selling data for this analysis, so nothing concrete there. And while there wasn't direct social media data quantified, it's reasonable to assume there's likely moderate buzz, just due to the inherent interest and speculative nature of the biotech sector. These kinds of companies, the ones aiming for big breakthroughs, often spark discussions among retail investors looking for those potential, moonshots.
Right, the potential game changers. Okay, so what is going to move the needle for Iovance in the near future? What are the big events, the catalysts on the horizon that investors really should be tracking closely?
Yeah, the key catalysts are pretty clear for a company like this. It's going to be upcoming clinical trial results, huge ones. Then regulatory decisions, particularly any news from the FDA regarding approvals, that's make or break. And also any potential partnership announcements or even merger and acquisition activity within the broader immunotherapy space could significantly impact the stock. Think of these as the major milestones, the inflection points that can fundamentally shift the company's prospects, for better or worse.
And successful product launches too, right? Assuming they get that approval.
Oh, absolutely. Exactly. Success in actually getting approval and then successfully commercializing their TIL therapies. That will be the primary driver of long-term value, no question. And, broader advancements in immunotherapies and cancer treatment technologies across the whole industry will also play a role. A rising tide could lift their boat too, potentially creating a more favorable environment for Iovance's innovations.
Okay, so we've talked potential, we've talked catalysts,
Mhm.
but what does this all mean for the risks involved? Because with such potentially high upside, there have got to be significant downsides investors need to be acutely aware of.
Yes, this raises a really critical question. The risks are substantial. Let's be clear about that. Stock-specific risks include a very high dependency on those clinical trial outcomes we mentioned. The very real possibility of clinical failure or outright regulatory rejection at any stage, that's a massive risk factor for these companies. It can wipe out significant value overnight.
And beyond just the company itself, what about broader sector risks or market risks?
Right. Sector-specific risks involve just the general volatility of the biotech sector itself. It's known for big swings. Then there's the intense competition in immunotherapy, lots of smart people working on similar problems, plus various patent hurdles, regulatory hurdles. It's a complex landscape. And then you have macroeconomic factors, things like shifts in overall market sentiment, especially towards speculative biotech stocks, or changes in interest rates. Those can significantly impact risk appetite for companies like Iovance. It's also important to remember this source noted it has moderate liquidity but high volatility. So this is definitely not for the risk-averse investor. This isn't a stock you buy and just forget about. It demands attention and a deep understanding of these unique risks.
Okay. So pulling all of this together then, the potential, the risks, the technicals, the sentiment, what's the overall rating for Iovance Biotherapeutics from this detailed evaluation according to the source material?
Okay, the overall rating from our source material comes out as 5.6 out of 10. And here's the breakdown. Fundamentals rated a 5. That reflects, an early stage biotech with clear potential but no current profits. Standard but not strong yet. Valuation rated a 6. That points to the attractive upside potential but acknowledges it's highly uncertain and traditional metrics are limited. Technicals also rated a 6, suggests that volatility but also hints at some breakout potential on the charts. Sentiment and news rated a 7. That's driven mostly by those positive analyst ratings and the moderate underlying bullishness. And then risk rated a 4. That's the lowest score, really highlighting the high risk due to all that clinical and regulatory uncertainty we've been discussing.
A 5.6 overall, with risk being the major flag there. So given that profile, who is this stock actually suitable for? I mean, it sounds like it's definitely not for everyone, right?
Absolutely not for everyone, no. It's really suitable only for highly risk-tolerant investors, people who fully understand and are comfortable with the unique risks inherent in the biotech sector. It's a speculative play. There's significant upside potential, yes, but it absolutely requires patience. And by patience, I mean a willingness to hold through the typical, often lengthy biotech development cycles and clinical risks. You might be holding for 1 to 3 years, maybe even more, through ups and downs.
Okay. And what about entry points? The analysis mentioned the current price around $3.10. Is that seen as a reasonable entry? What about a potentially safer range? And how does it fit for short-term trading versus that long-term hold?
Right. The current price, around $3.10, may offer a reasonable entry point based on this analysis. But, given the volatility, a potentially safer range, considering those support levels we talked about, and the general shoppiness might be somewhere between $2.50 and $3.50. Gives you a bit more cushion. Now, for short-term trading, its high volatility certainly offers opportunity, but it also comes with very high risk. So it's really only appropriate for experienced traders who use very strict stop-loss orders. You have to manage that downside aggressively.
Right. And speaking of stop loss, what's the guidance there for those experienced traders who might consider playing the volatility?
For stop loss, the suggestion is maybe consider setting it around 10 to 15% below your entry price. That helps protect against significant downside moves, which can happen quickly here. And for taking profit, maybe scaling out selling portions of your position near those analyst targets you mentioned, like $12 to $15 or other key price resistance levels. That could yield tactical gains if the stock moves favorably. It's really about being disciplined, having a clear entry and exit strategy. And look, just to reiterate, to be absolute crystal clear here, this is all based on the source material we analyzed. This is not financial advice, not at all. Biotech stocks like Iovance carry seriously high risk. Before you even think about investing a dime, it is absolutely critical that you do your own in-depth research, or better yet, talk to a trusted qualified financial advisor who understands your personal situation. The forecasts, as we've clearly seen, vary incredibly widely, and the actual stock performance may diverge perhaps significantly from any of these predictions.
Yeah, that's such a potent reminder. Even with all the data, all the expert analysis, the future is just never guaranteed. Especially in these innovation-driven sectors like biotech. Understanding the risks is truly just as vital, if not more so, than understanding the potential rewards.
Exactly. And if we kind of connect this back to the bigger picture, this type of investment situation really highlights how true discovery in biotech, which is potentially transformative for humanity, let's not forget, it just comes with this uniquely high degree of uncertainty. It really requires a specific kind of patience and a specific kind of risk tolerance from investors who are willing to ride that often bumpy roller coaster.
So the question remains for you, the listener. When it comes to Iovance Biotherapeutics, considering everything we've discussed, are you that risk-tolerant investor? Are you willing to navigate the clinical trial roller coaster for that potential multi-bagger return? Or does the inherent volatility, the uncertainty, give you serious pause? Definitely something to ponder as you continue to explore new investment opportunities. Thank you so much for joining us on this exploration today. We really hope this is giving you a clearer picture of Iovance Biotherapeutics and just the complex, fascinating world of biotech investing. We'll be back soon with another stack of sources to unpack for you.